All right. One more for Team Canada. We've got Harold Leishman, Senior Investment Advisor, Canaccord Genuity. Harold, take it away.
Thanks, Paul. Bobby, thanks for having me. So I'm as Paul said, advisor with CG Wealth Management. Today we're going to talk about Boardwalk technology. I am a shareholder and we do own the stock for clients. Briefly, who we are. So I'm part of a 9-person team. I run the venture capital portion of the team, the high risk situations. My partner Mike does the more conservative stuff. It's all driven on quant-based screening processes. Our disclaimer, these are the opinions of me and my team and not CG Wealth Management. And we'll get on to Boardwalk technology. So one of the reasons we picked this name is it's actually a little bit difficult to understand the story. So we think it's generally misunderstood in the market. As I said, we're primarily quant-based. This is sort of a summary of their financials. The quarterly revenue, you can see, is growing at a rapid rate. It sort of picked up after being flat for a very long time, and trailing 12-month revenue is now also growing greater than 25%. One of the main risks in the deal, I think we should always talk about risk, is the company is currently EBITDA negative, losing about $1 million a quarter. These numbers are all in USD, as is the valuation. Stock chart. This company's sort of been in transition for a while. They were heavily encumbered with debt, about $5 million US. Back here in 2021, they were able to get rid of that debt. Part of it was a conversion to equity, and part of it was via an equity placement. They've used those funds to pursue growth. And then it's been a difficult market, so it's obviously had some volatility. There is a lack of liquidity in the shares, so that's an additional risk for sure, is understanding share price volatility. Now, what does the company do? They take highly complex sets of data. So this is a customer example. They have Heineken, and this is on Boardwalk's website. Heineken USA manages 9 brands. There's a variety of different sizing in their product. They sell through distributors, and those distributors sell through retailers. And Heineken has to figure out where to spend their marketing dollars based on price point. So they end up having about 40,000 different data pieces, and a certain percentage of those are moving at different points in time. And how do you know sort of where you are in time? So they're able to consolidate that data and keep track of who's made what change when, so they can go and audit in history. Oops, sorry, too far. What changes have been made and how that affected the outcome. So in terms of auditing for something like tax across all of the different states and so on, they can figure out if the data's, well, the tax has been paid and the data is accurate. Also, was their promotion successful? They spent money based on price point for marketing, and it's a big part of their budget. So it's a little complex, but that's what they do. They do have a blue chip list of clients, which is what we like, or one of the things we like. You can see some of the clients here: Heineken, Estee Lauder, Ernst & Young. These are the different verticals that they're working on. Most recently, they did add another vertical they landed a large banking client. They announced it as sort of a top, I think it was a top 10 financial institution based in New York City. And that's had some significant impact on their revenue growth, and we think could be a significant driver of future revenue growth. It is a SaaS business. They converted their business to a SaaS business in 2018. This is a summary of their revenue broken down. The blue line represents their annual recurring revenue on a quarterly basis. So you can see it's growing at about 100%. And like many SaaS businesses, it is a land and expand situation. So here's an example of one consumer care product company they had. They started with $85,000 of annual recurring revenue in 2021. It's gone up, whatever that is, 3 or 4 times by this year, and they expect that to continue to grow. So with these large blue chip customers, there is a lot of room for expansion. One of the reasons we picked this for this particular competition is we think it's one of the torquier names out there. We think the revenue growth is very sticky. Client retention is north of 90%, and client revenue expansion is also north of 90%. And another potential driver of growth, this is in sort of a snapshot of their financials. You can see the marketing expense has gone from $27,000 a quarter to $250,000 in the quarter. This most recent customer win with the financial institution actually came from one of their customers called HCL. HCL is an $11 billion information technology business, and they brought in the financial institution. They are sharing in the revenue, and we think going forward, that could have a significant impact. Currently, Boardwalk has only 5 salespeople. If you add on HCL and potentially others as sales conduits for your product, we think that the revenue growth could be significant. Quick look at the customer list. The financial institution is not in there, it's unnamed. And very simply, right now, enterprise value to annual recurring revenue is just under 4 times, based on management's guidance, which is upwards of $7 million US. Their fiscal year end is March. We think it'll be 3 times, and going forward, we think it dramatically contracts. The valuation dramatically contracts going forward. So it is a rapidly growing SaaS model. We've tried to find competing products. We haven't been able to find anybody that does something similar. I said the big risk is they're not profitable. We think that profitability could be on the horizon with management's stated growth rates. And in terms of proof of concept, we think that's established with the blue chip names that they have. So that's my 3-minute pitch.
Awesome. Sorry about that, the little delay there. Thanks, Harold. So this is another business that we know fairly well. I'm not a shareholder of it, but happy to see the consistent growth that we've seen here. Back to some of the questions that I sort of been asking everybody is just give us a sense of the sort of the makeup of the shareholder base. If you know what's the insider ownership, and are you aware of any sort of significant institutional type of investors? Insiders have north of 20%. I forget the exact number. It might be 23 or 25. There is the fund that had the debt originally did convert into equity, or a big chunk into equity. So they would be a block out there, and the rest of it I think is just somewhat scattered around. So the shares are quite illiquid. So that is that adds an additional challenge for investors. I'm going to throw you a bit of a curveball question, but I mean this is a Canadian tech Paul. Sort of I love to do it. A MicroCap Canadian tech name. I would argue that in Canada these always get sort of misunderstood or mispriced or sort of left alone. What do you think it takes for a company like this to get recognized properly and get the sort of the comparable value you see typically in the US? Yeah, I think that is a challenging question. I don't think the company's done a great job necessarily of telling their story. I think they are looking to upgrade their listing in the US, and I guess would be spending some time and effort trying to get their story promoted down there. But I don't know the answer to that. Sorry. Gotcha. I was hoping your wisdom of the general markets would help us out there. Okay, perfect. Well, no, listen, thank you. I think you did a great job as well. Boardwalk Technologies. We've been speaking with Harold Leishman, Senior Investment Advisor,
Canaccord Genuity, or what do you guys call yourselves now? It's not Canaccord Genuity.
CG Wealth Management.
CG Wealth Management. Always changing the name.
A nice rebrand.
Nice rebrand. Exactly. Thanks so much, Harold. We'll